following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the June 6th magical Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there had a great weekend. I know I did. Let's make sure we have an extraordinary Monday, a marvelous and magnificent Monday. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go look at the circumstance of the bulls and the bears, the buyers and the sellers. We're going to go figure out what they are communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. But the key is, I am here to serve you. So feel free, and now is not too soon, to go ahead and call on in at 877-927-6648. Internationally, 727-445-1044. That way we can put four eyes on it, plus all the eyes that we've got inside the Tigers Den, those that are listening and sending emails. Of course, you can always send me an email, steve@tfnn.com, and I'll try to get to those questions or comments as well during the show out here. So let's go ahead and get things kick-started on this magnificent Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow trading up 79 points at 17,885. S&P's up 6 at 2105. NASDAQ Composite up 18 at 4961. Russell 2000 up 8 points at 1172. The DAX managed to close up 18 points higher, out at 10,121. The FTSE up 64 at 62.73. We've got gold trading up $5, trading at 12.48. Silver's up 8 pennies at 16.44. Light sweet crude off of its highs of the morning. It's trading up 68 cents, but at one time was up well over a dollar. I can't remember the exact number, but it's trading at 49.30. Lead the charge here to the upside. Dollar-wise, you got Priceline up $37. Credit Acceptance Corp up 11. Kite Pharmaceuticals up about 7. Calavo Growers, something like that, up about 11%. That's $6. Core Laboratories up 6. Chipotle up 5. You've got the jazzy one, Jazz Pharmaceuticals up $3 out there. To the downside, you've got Mirati Therapeutics down 43%. That's up $8. AutoZone down about $6, a little bit less than about 0.75% to the downside. Ocular Therapeutics off 41%. Adamis down. Pharmaceuticals off 53. Avalon Bay down a couple of percent out here. Google's off $4. So let's begin the day. What should we do? Well, now the market's in, market's in all-out bullish formation across the board. Totally across the board out here. It doesn't matter what indice you and I are looking at. The Dow, the transports, the Russell 2000, the Russell 1000, the Russell 500. It doesn't exist, but if it did, it would be moving to the upside. The S&P 500, the Wilshire 5,000, which is really the Wilshire 3681 or something along those lines. The New York Stock Exchange. So everything is moving to the upside. If we take a look at the advanced decline line for the New York Stock Exchange, that's the left-hand lower panel. The NASDAQ Composite, the one next to it on the right-hand side, that's in the lower panel. If you take a look at the Dow, that is actually making a higher high today than it did. I'm referring to the very bottom reading out here, that advanced decline oscillator, making a higher high than it did back here on May 30th, May 27th, May 30th out here. So that's a positive sign out here. When you got the advanced decline oscillator making new highs, price taking out previous highs out there, well, the message is just simply clear. Guess what? It's moving on to higher price out here. Now, in the case of the NASDAQ Composite, what's going to be kind of interesting out here is it is trying to take out and clear the April 19th level. Now, the April 19th level inside the NASDAQ composite is 49.68. You're at 49.65. What does it mean if that level gets taken out? Well, it could just be an A to B equals C to the upside. Huge out there. Or it could just be an expansion of swing points. I mean, there's a number of different patterns that will become in play when the NASDAQ composite does that. In fact, if we go take a look at it, let's just stay with the NASDAQ composite here just for a few moments, because I haven't done this. So, I always like to just do this stuff on the fly. What's all this mean out here? Actually, let's put this on a quarterly chart. That's probably a bit easier out here. So as we take a look at, let me turn off those profiles because they don't mean diddly at the moment. There we go. And those lines, I don't even know what those lines are. They're probably meaningful. There's probably a gap down or something along those lines. In fact, I'm sure there is, but we'll just have to add it back later. Now, if we take a look at the NASDAQ composite, we know that the old all-time high from 2000 is at 5132.52. We know that was a 100% move of a move. When a market does that, you might say, what the heck is that, Steve-O? 100% move of a move. Well, typically what we're referring to here is we're just saying when price gets back to old previous swing points. So in 2000, the market, the NASDAQ made its high, went ahead and for about 9 years, moved to the downside. There was a nice move off the 2003, 2002 bottom out here. Shallow retracement, quite frankly. But if we take a look at that retracement I got to actually put the right tool on there. That would be helpful. Otherwise, we're going to not be looking at retracements. I think, default. If I go to default, that's where I'll get it. So if we go from high to low, it only did a 0.382 retracement. And many might have said, shoot, that could be a huge A to B equals CD to the downside. And that would be an interpretation, but that's not what happened. Instead, it went ahead and actually made its 100% move. And by the way, we're looking at a quarterly chart out here. Just makes it a lot easier for us to take a look at, but it basically went back to its previous lows in 2002. Price got up now to the 2000 highs. That is a 100% move of a move. Typically, it's like a pole vaulter. Picture yourself, pole vaulter out there. Picture yourself as an athlete. Maybe somebody out there is an actual pole vaulter. Maybe not pole vaulter, but a pole vaulter out there. Is that the proper pronunciation? You know what I'm referring to, but picture yourself as one of those athletes out here. And picture yourself having, found the energy, you built up your muscles, you did whatever you had to do in order to be able to take it to the next level, which means clears that next point out there. Well, once you do that, here's the high bar. In the case of the NASDAQ composites, 5132 and a bit of change out there. Once you do that, you get over it, as it did back in April, back in July, again, the quarterly charts. I don't know recall which month it is exactly, but during the second and the third quarter back in 2015, in fact, the fourth quarter in 2015, right, it was able to make it up over that level. And now it continued to try to make it, right? But oftentimes you hit that goal, you hit that plateau, you get over that level out there, and what happens? Hey, you've achieved your goal and it's time to back up. The question is it just you're backing up to create some energy? Tom likes to call that building cause out there, which in this case, consolidation up at the highs. It's either that or you've got distribution that is going on out there. We've got low volume in the site. We're in the low volume seasonal cycle at this stage, so we can't really be using any of that as a determinant as we speak right now. But what we can say is that, what's likely to happen out here is that's likely to happen is NASDAQ composite is going to go up and tag that 5132 level again. In fact, it's most likely to go ahead and tag the high during that third quarter of 2015, which is 5231.94. And if you close above that, folks, inside the NASDAQ composite, do you really think the meaning is that the market's going to make a high and move lower? Really? That's not the meaning. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee.
See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's stick with the NASDAQ here just for a few more moments, a few more minutes out here. The screen, if you're watching us on Tiger TV, I may sneeze here. Not that I want to, but you know how you get that thing, it's just kind of just slides right up your nose, says, hey, I'm going to sneeze. I'm trying to hold it back, though. Mind over matter. So as we take a look at the NASDAQ composite, if you're watching us on Tiger TV, the left-hand panel of my chart is the monthly chart for the NASDAQ composite. Clearly, you can see from the 2009 to where we're at, the trend line has never been broken out here. All that we saw back in August 2015 was a test of the trend line. Price came right back to support, found support, and since it's moved higher. If we take a look at the middle panel, that happens to be the weekly chart. The right-hand panel is the daily chart. No, the monthly has red horizontal lines, the green has weekly, and the daily has blue out there. What are those horizontal lines? Those are the horizontal trading ranges or primary trading ranges that were developed by Bud Rolfs out there. Now, mine are a tad different than his. So his refers to primary trading ranges, and in Bud's case, a primary trading range for a monthly is going to carry forward over to the weekly, into the daily, and so forth. And Stevie's system, that's not the case. Why? The reason is, in the older days when he had to do this thing manually, which is how he in essence was doing it, just looking at the chart maybe electronically by dragging lines out there, he had to visually look for those areas co-located, opens or closes, means it didn't matter whether the body of the candle was an open or close, and try to find the largest number of those. And in fact, try to find 2 or 3 subsets of the largest number of those and see what you could find that was in common in those distances. And then once you had those levels became those horizontal levels of support and resistance out there. Once they were established, they became support and resistance. Well, I automated that because I don't know about you. I look at stuff and I'm like, well, time is valuable. I know that time is valuable to you. That's why, I do a workshop. I'm going to do a workshop next Tuesday for subscribers out there, and I know how valuable your time is at. So I condense decades into minutes, 60 minutes or less out there, so that it gets you right to the point with regard to a tool that you can use from this point forward forever that's going to add to your trading mix out there. Time is the most valuable thing. Well, in this case, and I do appreciate you sharing your time with me out here. Well, in this case, I automated it, and a close on a weekly chart is going to be different most times than a close on a monthly chart. There could be a period of time, depending on whether it's a Friday, right? It's the end of the month, where you could see the same thing on a weekly, and then that would hold true for a daily. But the daily closes there's 5 during the week if we're open for 5 trading sessions. So this automatically goes through and identifies those different horizontal trading range areas out there. So that being said, so where are we on the monthly? Where are we on the weekly? Where are we on the daily inside the NASDAQ composite? Well, if we take a look at the monthly chart out here, that's the left-hand panel. I'm not going to explode it up. Scrunch down looks pretty good. It's a nice view out here. It looks like Christmas with a little Hanukkah on the right-hand side with it being in blue. I mean, we've got everything that we need out here for total celebration. Well, if we take a look at the monthly chart, prices above this little dash line, that is the midpoint of the horizontal trading range. In this case here, the horizontal trading range, price came right back, tested a rising trend line, tested a horizontal trading range boundary line, 42.6285 to be exact out here. That level held the support. We're now above the midpoint, which is 47.96, and that says when you get above the midpoint out here, guess what? You can go all the way up to the highs. So where are those highs? Because I had thrown out, hey, if we get above the swing point on the daily basis for April 19th, where are we going to head to? Well, you know what? I would say where this says we're going to head to is potentially in a monthly 53.31. And if the market does certain things over the course of the next 2 weeks out here, that would be its message. And it may take until September to get up there, but that would be its message. Now, in the case of the weekly, last week, where the NASDAQ composite closed was at an important weekly horizontal trading range level. That's at 49.43. It's weekly. That means this week's close is important. But if price stays above 49.43, it is telling you to anticipate a rise in price to the 51.08 level. So the next stop inside of the NASDAQ composite on a weekly basis, if in fact it clears the April 19th level, is going to be 51.08. On a daily basis, well, that's a tad lower. It says the next level where price will head up to is 5,074 out there. So 49.71, which is in essence where we're trading right now, 49.67, which in essence is really the high, and I'm not giving you the exact number, but the high of April 19th. We're at this very critical pole vaulting. That's how I tied it all back together. We're at this very critical pole vaulting level on the daily chart. And once it's able to get above that, it'll probably be like Roger Bannister. Everybody else is going to say, if the composite can do it, well, then, by gosh, I'm going to go ahead and do it as well out there. So that's what we want to be paying attention to. As long as I will tell you on an intraday basis, what are we looking for? If we take a look at the Janet Yellen, market kind of pulled back thing, you couldn't have gotten a more bullish signal than the one that we had during the last hour. While everybody was paying attention to Janet Yellen's lips moving, you and I, we were paying attention to 2103.25. We were paying attention to price pulling right back into a horizontal hidden. Of course, not hidden on this show, not hidden anymore at TFNN because I unveiled that secret to all of you out there. And price came right back to that hidden, other than here at TFNN, 2103.25, tested it. Remember, the close, the candle, the body of the candle is the essence of price. Tested it and has rejected it. Now, this is an element that occurred on Friday. As Stevie forgot all about it out there. Blasphemy. But I remembered I went and posted inside the Tigers, then I forgot to put it inside the newsletter this morning out here because it is a key level to help us manage which side of the trade to be on. And 2103.25 is a real key level for us to be watching. I can't control what the markets are going to do next. What I can tell you is I can tell you the story of what the markets are telling you and I right now. And like any very good narrator of any story, you know that you're going to turn the next page, and if that next page has got bad information, well, you got to go ahead and read that as part of the story too. That's what you and I do, depending on what time frame it is that we're trading, as we look at each and every candle session and what it's doing in comparison to what it's taking out and so forth. So 2103.25 has held that support. That level had only been tested out here at about 8:30 this morning. Price moved up inside the ES Mini, found a little bit of resistance, backed off for about an hour, and then at the open, it went ahead and began moving higher. Now we've got a test to the downside. Now, sometimes, and it's not often, but sometimes we start to get in this little consolidating area where price will go back and forth between it. It says it hasn't made its mind up, and at those times of the day, or period, you just kind of push it off to the side. But that is not where we are at just yet. But it is an important level. You come in here tomorrow morning, well, not here because it's tomorrow afternoon when you would be coming in, but you wake up tomorrow morning, and the price is closing below that level. That's going to be an early shot across the bow. You got to take a look at other things. You got to always keep things in perspective. But that would not be good news bears actually be good news bears. It would not be good news bulls out here. But right now, everything, and Yellen, I think she's done talking, isn't she? She's done talking, right? So the market's already consumed her information out there, and it hasn't really responded that much. So everything looks pretty bullish here. Look bullish on the advanced decline oscillators out there. So life is pretty good. If I take a look at light sweet crude, what's it doing out here? Blue past its 48.97 level. That's the daily TAS market profile high. Light sweet crude is headed higher. How are our markets going to go lower? Oh, that's right. They're not. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 101, S&P's up 9, Composites up 25. Question inside the Tigers Den says, Steve, are you long gold? What do you see? The answer to your question is no. I'm waiting to short gold out here. Again, perspective with regard to time frame. So let's make sure that we come clear out here that I'm looking for daily time frame swing-ish type trades out there that are going to last more than a day out here. However, in asking the question, should you be short gold right now, the answer is no. Friday's price action out there says to me that level of resistance failed and that gold should move higher. Where should gold move higher to? That is really the question. Well, let's take a look at gold. Let's do it on a couple of different time frames out here. Well, this answers one of the questions, I suppose. So I guess let's do it. Let's do it in reverse order. If we take a look at a daily time frame, what we know is that we have, an established trend line out here. That's just simply coming from the highs out here on May 2nd. Nobody can deny that we didn't see at least a short-term top in gold out there. A nice 100-point move to the downside. The high there was 1308. The low, which came in 4 or 5 days ago, was down at 1201. So we had a nice little 100-point correction thus far in gold. Now, what does gold have to do in order to get bullish out here? Well, there'd be a couple of different it's short-term bullish right now. To answer your question, Danny, short-term, maybe. We'll go take a look at a intraday chart out here. But longer-term, meaning referring to the daily chart out here, well, it's also still bullish, but up until that trend line. And there's really two levels of resistance that you want to be paying attention to. It's going to either be our horizontal levels of our TAS market profiles out here, which is the weekly level that we're looking at, which is 1286 out here. And I don't know that it'll reach up to 1286. We have this trend line, that little red diagonal line that it's got to contend with. If it can get above that, then you're looking at 1286 out here. Now, wide-ranging bars, like we had on Friday. Markets do not end on wide-ranging bars. Well, it's Sunday/Monday into the candle that we're in out here. We don't have a wide-ranging bar any longer out here. So a reversal could occur at any point in time out here. So you've got some strong, I think you've got pretty strong resistance up at those levels. Now, the trend line, I don't know where that's priced at, 1270, 1272, and then you've got that 1280-ish level inside the TAS market profile. If we go switch down to a shorter term chart, let's go to a 2-hour chart out here, right? There's that big move off of Friday's jobs report. What we know that we have out here, if you take a look at the 2-hour chart, this is what I want you to watch for. So if you're an intraday trader, this is what you're really paying attention to out here. And I don't have any profiles. I can go ahead and create those and put those up on the screen. But right now, let's just take a look at what we do know. Here's a key reversal session that took place at 8 p.m. on June the 5th, last night. So as the price of gold got up to 1251.30, it backed off for the next 2 hours. And what it did was it took out the previous high of that bar that was at 6 p.m., took out the previous low. That's a key reversal. Well, it's only a key reversal because it came in an extended condition, and I'll show you what that extended condition was. So that says, in order for gold to then continue that bullish move, which I anticipate that it will getting up in that 1270-ish, 1280 level, you got to see it get above 1251.30. That's a key level of resistance out here. So that's the number that you want to be watching for. If we look at the sell the D point of the A to B equals CD pattern on a 120-minute time frame, well, guess what? That's what came in last night out here. Because if we take a look at our ABCs on the price move of gold, we can see that what it did was it made a 1 to 2 A to B equals CD. And you know what happens because you own Tom's book. You should own Tom's book. I own several copies of Tom's book. You should know what happens when you make a 1 to 2 A to B equals CD. You're going to do something else. In essence, that's what Goldilocks has done just at this point in time by moving lower. Hasn't been much of a retracement. Really has come right back here to this wide-ranging bar, has it not? Necessarily come back to the top of a breakout area. And as long as gold is priced above the 1243.80 level, that continues to open up that door of moving to that 1270, 1286 area out there. So that's what I hope, Danny. I hope that helps answer your question. At this stage here, though, until you get above this high, that key reversal, that 1 to 2 A to B equals CD, you got to watch then what area? You've got to watch 1243.80 because you start getting below that, then you've got to sell the D point. Truly sell the D point of the A to B equals CD. And what does that mean? That means you've got several different outcomes. And if you start to get inside that wide-ranging bar, well, I guess I should do it the correct way. Come on, give me retracements out here. Come, give me a retracement. There we go. That says going from the low to that high that came in last night out here. It says you pull back to 1232. Maybe even 1220, not out of the equation out there. So that's what's going on in gold, but that's looking at only 2 different time frames out here. Now the question really is hey, hi-ho, silver. What the heck is going on with silver? Because silver is not acknowledging the celebration that went on in Goldilocks. Now, this is a daily chart here for the silver contract, and although it was a nice day on Friday, it bounced right up into resistance. You might say, well, how the heck can you say that, Steve? Oh, well, I'm doing a workshop. I'm not looking at the screen right now because I'm looking to change something here, but I'm doing a workshop next Tuesday. That's a workshop that you absolutely want to attend. There's no reason not to attend. Anyone and everyone can and should attend. And if you don't attend, you got to ask yourself, well, why? Why wouldn't I want to learn something? Why wouldn't I want somebody to share with me and be able to compress decades into an hour out there of information? Look, as you know, and my clients and I were short gold. We got out of that short gold trade anticipating that gold was going to bounce. It bounced. It got a little bit higher than where I thought it would. Okay. But silver didn't. Silver, hi-ho silver, bounced right up in that little red line. And it's called the oscillator and change line. I'm not going to describe to you all the math and everything behind it right now, but I'm going to share with you at the workshop next Tuesday exactly how you want to be using this. And it is at this stage here, a resistance line. Look at how silver has just come right up into that level and is held as silver. It was a hidden line. It was hidden until I shared it with you and shared it with subscribers out here. So as we speak right now, silver is far from confirming the message that we have here in gold. I don't know who's the fibber and who's the fibbie out here. But that's the message inside of silver. We do not have confirming messages going both ways. So, Danny, I hope that helps you. Even though you weren't asking about silver, we had to really be able to take a look at both out there. Okay, so now let's go take a look at some individual stocks. Let's do that. We very rarely do we spend time looking at individual stocks out here, and really we should. So let's take a look at, and I don't know what's going on with some of these therapeutics out here. I know that Martin Shkreli's been out there, and I don't know if he's involved with any of these companies. I don't really pay attention. I don't see the news on Mirati Therapeutics. Maybe somebody in the den might know, and if so, you can tell me so I can take my foot out of my mouth. That would be a good thing. And it's a big foot, and oftentimes, kind of smelly. So it's good to not have the foot inside the mouth. But if we take a look at Mirati Therapeutics, big volume for this equity to the downside today, 2.2 million shares. Now, this thing, interestingly enough, made a high with volume. Back in September 15th, there was about 2.2 million shares out there, and that was at a price point of about $52. So this thing has just been cut to smithereens out here, and in fact, so smithereens, we got to put this on a weekly chart, and son of a gun. So this equity, it's not good news for those holding it. It could easily go back to $4 to April of 2013. I hope nobody out there is holding Mirati Therapeutics, MRTX. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Let's see here. Let me get back to where I was at. So I had some questions out here. If I could take a look at a few things. Paul S. wants me to go ahead and take a look at the GDX. So let's go take a look at the GDX right now. See what this is the ETF for the gold miners. Let's go see what it is doing out here. As we take a look at it on Friday, a beautiful day out here, big volume behind that move, 190 million shares out there. Now, that 190 million shares, we go take a look at what it was doing. We'll put a couple of tools out here on the chart. First thing we're looking at is the swing point. Now, the swing point we're looking at is May 2nd. Unless May 2nd was a holiday, which I don't know that it was, we would have to say that Friday's light volume summer trading session says that the high is going to be tested. Why would we say that? Well, the low of that swing point is 25.10. As we said, Friday, you moved up into that swing point with 190 million. It would therefore, when you close inside a swing point, you do it with volume. Says more likely than not, you're either going to go ahead and try to blow it away, or you're at least going to go test the top of it. And that is a price point of 26.17. Now, today, you're trading at 25.14. You could close underneath 25.10 today. And the volume, again, on that swing point for May 2nd is 84 million shares. You've already done 40 million shares. We've been trading for what? 4 hours, 4 of the 6 hours. So you could actually have on Friday, you could have a move into the swing point with volume. And today you could have an absolute failure on price and volume of that same swing point. But you'd have to see a price move close below 25.10. Now, just because you'd have a failure out there, you got to see more than that. You'd have to see more than that inside that swing point. So the question I assume you were asking, Paul S., is, where's this thing headed to? To the best of my reading of the message of the markets, what the GDX is communicating to you and I is that it wants to go test 26.17. And at that swing point, then we'll make a determination as to what it wants to do next. If we go take a look at our TAS profiles out here, let's pop up the daily and the weeklies out here, see what its message is. Its message is that it will go test the 26.17 level. That, again, happens to be the high of that swing point from May 2nd. That also is the top of the weekly TAS market profile I guess I probably should put the bottom and the weeklies out there as well. So that's what looks like GDX is going to do. Another question from Mike K is if we could go take a look at Vail, not Vail the resort out there, but Vail or Valley. How do you pronounce it? VALE. We'll go with either or. But let's go take a look at what it's actually doing out here. And that is trading out at $4.68. So this is trading above. Right now we've got our market profiles out here. So let's just leave those for the time being. We know that it's above. On Friday, there was a move above the daily market profile. Now that becomes resistance. That's how we go ahead and we use this. That should have been resistance. It failed to act as resistance. Old resistance becomes what? Exactly. Old resistance becomes new support. So that says if you're in this trade, you really want to see this continue to close above the price point of $4.56. What does it mean if it gets back below there? Well, then you'd have, in essence, the reading would be a failed type breakout, so to speak, or it's just back below resistance. And old resistance wasn't new support. And then price could pull all the way back down to the 373-ish range. Maybe it's 431, but that would be your target-ish type area. Okay, so it's up above resistance. Let's go ahead and turn those profiles off. On a weekly basis, though, Mike, this says, hey, you could easily make a move to 598. Why does Steve-O say that? Well, back to our profiles, if we turn our dailies off right now and we actually turn price, well, we don't need to turn price off, right? What does this market profile say to you, Mike? This says that the point of control, that little center of the box, that little dash line is closer to the bottom, right? We can visually see that. What's its message? Its message is the bias inside this price box area is for the bulls. And once you get above that point of control, what is that area? That's like you driving down the road. I guarantee you, wherever you live, there is a highway. There is a road that at a certain time of the day, expressway, that no matter what, there's traffic. Well, on a stock chart, that spot on the stock chart happens to be that point of control. And that's a weekly point of control. That's the area where it's trading right now. But if it can clear past this, it's very much like you when you're frustrated because you know you already anticipated hitting that congestion zone. You were just hoping that it wasn't going to be as congested as it was. I know I'm just speaking for myself out there. But as soon as you get past there, then, pedal to the metal. Well, pedal to the metal inside of this equity would say $5.98. So that's what the profiles are saying. So what else do we have that could help us out there? We know as this thing gets up into this April 21st level, that happened to be a key reversal session, and that's from the 550 to 617 area. You better have on your seatbelt as you are approaching that area, because that could be the area where anybody who's bought up there at that $6 range, when this equity got down to $4, right, 6 to 4, and they were still holding it, their sphincter muscle was saying and praying, please just get back to this price level so that I can get my dollars back. And that's what would likely happen. So this is going to have really stiff resistance as it gets into that price area of about 550, but you're at 470 right now. Now, there was a request by Z in the Den to take a look at November beans, December corn. So let me see here, and I don't have everything updated here, but let me see if we can go figure that out. So we want to take a look at, it says here, November beans, November soybeans. So that would be X marks the spot. So let me see here, ZS. Let's see if we can go ahead and put that in, see if we can get an actual chart out here. So is that what you are referring to, Z, out there? If so, just a Y in the den. That way we don't have to take a look at the continuous contract. So it looks like it should be to me out here if we take a look at it. And if not, then we'll just simply rerun what it is that we're taking a look at. Now, this has cleared a swing point. Nice wide-ranging bar out here. This is from the trading session of May 10th. The volumes on my screen out here, I kind of ignore them. Yeah, I love eSignal, but sometimes these volumes on these futures contracts, especially in the dailies, are a bit much. Now, I see you posted something, so maybe you actually posted. No, those look like weather patterns or satellite things to me. Yeah, those are weather patterns. So as we take a look at the November soybeans contract out here, let's put this back a little bit further. Of course, I'm going to really be running out of days. So where's this headed to? Well, looks to me like where this is headed to is all the way back to the highs from June in 2014 in the 116-ish type of level out here. So everything looks pretty bullish when I take a look at this chart. I don't think, but let me check. Let me see if I've got something on my Ninja chart where I can go ahead and put up the contract. Let's see what we can do here. Yeah, I can put up the continuous contract, I think, and we'll see if there's any price relatives. Well, so here's the problem. Here is, now this is going to be a little bit, here's the difference when we switch over to the continuous, and that's what I have to do right now, but I will go ahead and we'll put this chart up on our screen out here, so we're looking at the same thing, and he's trading the November contract, but still something to be a little bit concerning. Let me put this out on our chart for you, is the fact that price has been moving higher with less relative strength out there. Now, we know that markets, commodities, whatever time frame it is you're trading on, doesn't matter. They tend to move higher and lower, and when they move higher and lower, boy, that was a really exceptional statement. What I really was trying to say is that they make significant tops and bottoms when they're moving higher with less relative strength and lower with less relative weakness. At this stage here, the continuous contract says that price is moving higher with less relative strength. No bearish reversal signal, but you'd like to see this pattern go away as it did back here on April 12th. And they can go away. And then it says you continue moving higher. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 117, S&P is up 11, and was just checking in on the advancing issues inside the New York Stock Exchange and the NASDAQ Composite. We spent the first two segments looking at the NASDAQ Composite. And we're going to go ahead and finish off by taking a look at the NASDAQ Composite as well. And you can see that today we're talking about being able to deal with the April 19th swing point. That price point, by the way, is 49.6867, and you're just above it by a few bucks right now. So for all intents and purposes, unless we see some type of failure, and I just don't see it, then price is going to be able to clear that. And that's being confirmed, and it's a positive confirmation. It's being confirmed by the advanced decline oscillator making a new high out there today. Again, the importance of this chart is really the close. It's 1:55 p.m. If it closed like this, I can tell you the message couldn't be more clear, couldn't be more equivocal. And if you're sitting on some kind of short position, I hope you have a stop in place, because that is not the message. That is not the story that the markets are communicating to you and I. And what you're going to really be focused on, we're all going to be focused on when it comes to NASDAQ Composite, is what the Sam heck happens when the price gets back in this December 29th, December 30th area, because that is an island top out there. And if those levels get taken out, we'll call it the price point of 51.16.99. Remember those horizontal trading range boundary lines that we looked at earlier? There, it's going to come to fruition. There's nothing more bullish than a failed bearish pattern out here. So be careful out there. Again, if on the short side, that is not the message anywhere, unless you have the ability to absolutely call the top tick. I don't have that ability to do that, sorry to say. I have done it once out of all those trades. Are you kidding me? In any event, out here, and the New York Stock Exchange, holy Toledo out here. Where did we even come up with holy Toledo? Of course, I'm from Detroit. It might have been easy for us to come up with holy Toledo. But holy Toledo out here. Look at this thing. There's its advanced decline line. Now, it's at all-time, I do mean all-time new highs out here today. Is that the way that a market top forms inside the New York Stock Exchange? You know, I posed that question to you in the past out there, and you already know the answer to that. And the answer is positively, absolutely not. Never, ever is that how a top inside the New York Stock Exchange forms out here. Now, the New York Stock Exchange hasn't even taken out its highs yet. I don't think so. April 27th is the high. 10,593 is the number, and a bit of change here, 10,553. So the mere fact that it hasn't taken out highs, does that mean that that's a bad thing? No, doesn't mean that at all. It means that it's going to move higher. The 10,759 is in its range out here. You know, the New York Stock Exchange, if we go back and I apologize, actually, you know what? Z had asked me to go take a look at corn out here. I want to do that for him. Bottom line here, though, as we just simply come back to that, is that the message here is just simply outright bullish. That's the current message of the markets. And if we go take a look at corn, December corn, to see what's going on out there, I know I put it here. Here we go, commodities. So if we take a look at it, let me put up, this is a continuous contract. I mentioned this before when we looked at soybeans. And you also have corn moving up, doing it with less relative energy. You're in wave number 6. You clearly have an A to B equals CD to the upside that is underway. But that A to B equals CD to the upside, that is not complete, because you're moving higher. You're moving into these levels with nice bars out here. You can see that the 1-to-1 A to B equals CD is just about to be completed out here. But just because it's completing the 1-to-1 does not mean that's where price stops. But watch out for your 7th wave to the upside, and watch for a bearish reversal signal. Not that I see one as we speak just yet, but, you know, you're near those topping-ish type patterns. Hey, folks, it is Magnificent Marvelous Monday, and you know what that means. That means our resident polar bear, David White, is up next. And we got the Tom O'Brien Show from 3 to 5. Thanks so much for joining me here. Hey, don't forget, get over to the homepage at TFNN.com. Sign up for next Tuesday's workshop. Plus, you get my newsletter service for the next 30 days. Have a great Monday. Look forward to seeing you on terrific Tuesday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.